Okay guys, welcome back to Elevating Traders, and today I want to ask you a question. How do you know you're trading the right market? Because you might have a really good strategy focusing on trend following opportunities, mean reversion, breakouts, etc. But you might not necessarily be trading on the best market for that strategy. There might be a better market which is more profitable, more suited to the style you're trading. And if you don't necessarily know if you're trading on the optimal market, you're just trading on a market because it looked good or it's just the first market you stumble upon, then you might be doing yourself some harm in terms of your profits. Now, a great way to find that out is through the Elevating Traders backtest tool. So if you do log into the platform, just head over to Elevating Traders. You can sign up today. Once you've logged in, email or your Solana wallet, you can then click the validate tab in the left corner and then click backtest. Now this will bring you to our backtest tool. Now this is a great tool to backtest different strategies, indicators, time frames, different markets across different periods, and of course settings within all of those components we just mentioned. But today I want to focus on the pair or the market you're trading, because you could be trading forex, you could be trading crypto, you could be trading commodities, stocks, indices, etc. But depending on your time frame you're trading, the style, even necessarily the how long you hold the position for, will all be impacted by the market you're trading. And let's say you trade trend following. Let's say you use a breakout opportunity. So you're looking for trend continuations in breakouts. Let's say you're focusing on Bollinger Bands. We can look at MA crossovers and MACDs and RSIs. We can look at that as well. But today is just more important about the pair, not necessarily the strategy. So let's say you're looking for Bollinger breakout opportunities. Let's say you're going to have a default setting 20 and 2. Now I'm going to put this to 3,000 just to give us the most opportunity. Now let's say that you're focusing focus on commodities like gold, for example. So you're looking for a Bollinger Band breakout in favor of the overall trend. So that means you're predominantly looking for long. So we'll cross this off so we don't take any shorts, and we're just focusing on longs for now. We'll say in terms of risk and exit, we'll go balance 2 and 3. So our ATR is 2, and the multiple is going to be 3 for our target. So pretty balanced, not too aggressive, not too conservative. And let's run the back test. So as we can see, back test has just been run, 58.9% in profit. So really nice return there. You can see win rate 42.5, pretty respectable. Max drawdown 12%. So that's a really good ratio between the total return and the max drawdown. 40 trades, so not massive amount of trades. We did do this on the daily chart. So not massive amount of trades, but definitely a very strong start. You can see here, this is where we have our positions. You can go through the chart and see them. This is the equity curve. Equity curve looks pretty modest, very flat for a large part of it, but we are starting to drift upwards, so a very good sign. It's not just completely up and down, up and down. There's a slight upwards drift, and of course these are the positions. So gold, very good start. It could be a very good market to be trading, and of course notoriously, if you look at the market, it does trend higher over time. Taking breakouts, only looking for buys, does make sense. Now, let's say instead of looking for gold, you're looking at some indices. Let's say you're looking at the S&P, for example. So a similar type of market in terms of we just had that natural uptrend, but with the S&P, we'll probably be a bit more persistent with that uptrend. With gold, we're going to have a longer periods of consolidation. So maybe this could be a bit better. Let's see. Again, we're going to keep the parameters of the experiment the same, so we're not tweaking with the thresholds or the date, etc. We're going to keep even the risk management the same as well, and we'll keep that, allow short positions in the back test turned off so we don't take any shorts. Again, we're going to run the back test, and of course you can look at the speed of how we're testing and working here, which is phenomenal for us, because that means we can explore many ideas in a very quick amount of time. Now this, again, on the daily chart, only 10 positions, so not a lot to take from this. 8.4%, 8.46%. So in profit, max drawdown about half, so a decent ratio, but not a lot to go from there. But we are seeing some positivity. Okay, let's switch up completely. Let's go to some forex markets. Let's go to Euro USD. We'll keep the long positions now, just to keep the test, the experiment the exact same. We'll run that on Euro USD. I'm not expecting the best returns here necessarily. Yeah, minus 15.43. So you can see if you're trading a currency market compared to an index or a commodity like gold, you can see you're already putting yourself in a very difficult position. Doesn't mean you can't make profit with this type of strategy. It just means that if you're just looking solely on this, at least for the historic amount of data we've tested, it's going to be very, very difficult to extract a profit. Gold indices looking a lot better, gold in particular so far. Now let's go for a final test on crypto. Actually, we can do stocks as well just to see how that looks. Let's go Bitcoin. So again, we'll do Bitcoin focus. Again, no short positions, just to keep the test the same for now. Bitcoin, wow, very huge return there, 703%. And I think that's purely down to the explosion of BTC, because again, we're taking breakout opportunities. So once the breakout is met and Bitcoin goes for the exponential run, again, you can see our biggest trade here, 32.84%. Worst trade still 11% there, so it's still pretty big for a downside, but really, really nice return. Even the max drawdown to the total return ratio is phenomenal. Win rate above 50%, that's already a good start. Profit factor looking very good. You can see these are the positions. And again, very nice equity curve, always pointing up there. Of course, a bit of a downturn now, but naturally pointing up. So Bitcoin looking like a great opportunity. I think that's just because of the explosiveness of BTC. Let's look at another crypto. Let's say Bitcoin is the better one. We're running Ethereum here now. Ethereum 999. So even Ethereum producing a lot better. So again, you can see the opportunities that these cryptocurrencies do provide and the breakouts momentum. That's why people like to trade them, because they're very aggressive and profits can be aggressive. You can see here, best trade 52% there as well. Equity curve a little bit more volatile, so you might want to choose Bitcoin's a bit smoother, but again, you're looking at really good returns here. And let's go for a stock. Let's go Tesla, and run the exact same test. Again, long only, 169%, looking pretty well. Pretty deep drawdown though, 48.94%. Pretty low win rate as well, but overall we are profitable and seeing some upside. Pretty big trade there as well. You can look at some of the positions. Equity curve looking pretty attractive as well, and those are the trades there too. So you can see just by experimenting with different markets. Of course, we kept the experiment the same. You can do this with crossovers, RSI, etc., candlestick patterns as well, other strategies too. But just keeping it the same and looking at what makes sense for the market itself. I know that in cryptocurrencies, because of the explosiveness, there could be some really nice opportunities there. FX, I probably want to ignore, and maybe gold as well. I'll focus on quite a lot too. Indices could be fruitful as well, but I do think gold again has a bit more explosiveness than the indices too in general, especially after a long period of consolidation as well. So just by testing these strategies, testing these indicators, different markets, you can see, okay, if I was trading FX, maybe I should be putting my attention in some commodities, into crypto. I don't necessarily have to ignore FX as well if I really want to trade it, but I know that I'm going to get more opportunity, better opportunity in some other markets as well. So hopefully you do find this video useful. Again, guys, you can use this tool, experiment for yourself. You test different strategies, different time frames, different symbols, different ways of managing the position as well. We kept it balanced, but you could go conservative or more aggressive, or you could even custom that as well. Of course, change settings within it as well. So if you are interested, go check it out, guys. Link in the description below. Let me know how you find it. And if you have any questions, drop in the comments below. You can find us on Telegram or Discord. But guys, thank you for listening. Take care. See you in the next one.